This section contains multiple choice answers on basic accounting. It will help the students to prepare well for their exams. 1. The revenues and expenses of a company are displayed in which statement? A. Balance sheet. B. Cash flow statement. C. Income statement. D. None of the above. Answer. C. Income statement. Explanation. The income statement displays all the revenues and expenses of a company. 2. The main purpose of financial accounting is A. To provide financial information to shareholders. B. To maintain balance sheet. C. To minimize taxes. D. To keep track of liabilities. Answer. A. To provide financial information to shareholders. Explanation. The purpose of financial accounting is to provide financial information to shareholders. 3. The expanded accounting equation is used by which statement? A. Cash flow statement. B. Balance sheet. C. Income statement. D. None of the above. Answer. B. Balance sheet. Explanation. The expanded accounting equation is used by the balance sheet. 4. What type of balance do asset accounts have? A. Contra. B. Credit. C. Debit. D. All of the above. Answer. C. Debit. Explanation. Assets account have a debit balance. 5. The kind of debts which are needed to be repaid in a short term is known as A. Fixed liabilities. B. Current liabilities. C. Depreciating assets. D. Intangible assets. Answer. B. Current liabilities. Explanation. Current liabilities are the debts that needed to be repaid in a short period. 6. The account which increases equity is known as A. Debit account. B. Credit account. C. Revenue. Answer. C. Revenue. Explanation. Revenue, owner investments and retained earnings increase the equity of a company. 7. What are the long-term assets which do not have any physical existence? A. Intangible assets. B. Tangible assets. C. Current liabilities. D. Current assets. Answer. A. Intangible assets. Explanation. Intangible assets have no physical existence. For example, goodwill, brand recognition. Patents etc. are known as intangible assets. 8. What is the supporting evidence in a business transaction called? A. Journal. B. Ledger. C. Voucher. D. Contra voucher. Answer. C. Voucher. Explanation. Vouchers are proof that a business transaction has taken place. 9. The expenses, profit and loss of an organization are recorded in which account? A. Current account. B. Personal account. C. Nominal account. D. None of the above. Answer. C. Nominal account. Explanation. The nominal account records all the transactions of a business for one fiscal year. 10. Which person owes an amount to a business organization for buying goods and services on a credit basis? A. Creditors. B. Debtors. C. Owner. D. None of the above. Answer. B. Debtors. Explanation. Debtors are the persons who owe an amount to a business organization for buying goods and services on a credit basis. 11. When are balance sheets prepared? A. Quarterly. B. Yearly. C. Monthly. D. None of the above. Answer. B. Yearly. Explanation. Balance sheets are prepared yearly as it displays the liabilities and assets of a company. 12. What is activity ratio? A. Financial ratios that measure a firm's ability to convert different accounts into a balance sheet. B. Ratios that measure a company's ability to pay debt obligations and its margin of safety. C. Financial measurements that assess the ability of a company to meet its financial obligations. The ratio that evaluates the company's ability to generate income as compared to its expenses. Answer. Financial ratios that measure a firm's ability to convert different accounts into a balance sheet. Explanation. Activity ratios are a category of financial ratios that measure a firm's ability to convert different accounts within its balance sheets into cash or sales. 13. What is current liability? A. Assets of a company that are expected to be sold or used as a result of standard business operations over the next year. B. A potential liability that may occur in the future. C. Company's short-term financial obligations that are due within 1 year or within a normal operating cycle. Obligations listed on the balance sheet not due for more than a year. Answer. C. Company's short-term financial obligations that are due within 1 year or within a normal operating cycle. Explanation. Current liabilities are a company's short-term financial obligation. 14. What is an operating cycle? A. A metric that expresses the time, measured in days, it takes for a company to convert its investments in inventory and other resources into cash flows from sales. B. The time it takes a company to buy goods, sell them and receive cash from the sale of said goods. C. The process of hiring personnel to conduct the daily operations of the business. D. Collective process of identifying, analyzing, and recording the accounting events of a company. Answer. B. The time it takes a company to buy goods, sell them and receive cash from the sale of said goods. Explanation. An operating cycle refers to the time it takes a company to buy goods, sell them and receive cash from the sale of said goods. In other words, it's how long it takes a company to turn its inventories into cash. The length of an operating cycle is dependent upon the industry. 15. What are outstanding expenses? A. Expenses which are not paid off in the current balance sheet. B. The necessary purchases that keep a business going from day to day. C. Type of expense that is due but has not been paid. None of the above. Answer. C. Type of expense that is due but has not been paid. Explanation. An outstanding expense is a type of expense that is due but has not been paid. This expense becomes outstanding to the company when this has taken the benefit, but the related payment has not been made simultaneously. For example, rent due but not yet paid. 16. What is bank overdraft? A. A document used by a company's accounts payable department containing the supporting documents for an invoice. B. A negotiable instrument where payment is guaranteed by the issuing bank. C. A negotiable instrument similar to a bill of exchange. D. A line of credit that covers your transactions if your bank account balance drops below zero. Answer. D. A line of credit that covers your transactions if your bank account balance drops below zero. Explanation. An overdraft facility linked to your everyday transaction account is an unsecured line of credit designed to cover short-term cash flow shortfalls. Discuss this question. 17. Which ratio protects the creditors? Lower debt-equity ratio, liquidity assets, higher inventory ratio, return on investment ratio. Answer. A. Lower debt-equity ratio. Explanation. Lower the debt-equity ratio, higher is the protection to creditors. Creditors usually like a low debt-to-equity ratio because a low ratio, less than 1, is the indication of greater protection to their money. 18. Return on investment equals A. Net sales x 100. B. Fixed assets x 100. C. Total assets x 100. D. None of the above. Answer. C. Total assets x 100. Explanation. Return on investment. Ratio. ROI equals net profit, total assets, x 100. Return on investment, ROI, is a performance measure used to evaluate the efficiency of an investment or compare the efficiency of a number of different investments. 19. What does improper utilization of resources and overinvestment in assets indicate? A. Low return on. B. Investment. C. Low sales. D. High sales. E. Depreciation of assets. Answer. A. Low return on investment. Explanation. Improper utilization of resources and overinvestment in assets indicate a low return on investment. 20. Which budget is prepared for advertising, salary, and market analysis? A. Operating budget. B. Sales expenditure. C. Budget. D. Static budget. E. Labor budget. Answer. B. Sales expenditure budget. Explanation. The selling expense budget is usually based on the sales budget and the prior expense budgets in prior years. 21. What does a master budget include? A. Material budget. B. Production budget. C. Sales budget. D. All of the above. Answer. D. All of the above. Explanation. A master budget consists of sales budget, production budget and material budget. 22. Transaction is referred as which event in accounting? A. Political event. B. Economic event. C. Dividend. E. Cash transaction. Answer. B. Economic event. Explanation. In accounting, an economic event is referred to as transaction. 23. Recording financial transaction is part of A. Accounting. B. Bookkeeping. C. Data entry. D. Journal. Answer. B. Bookkeeping. Explanation. Bookkeeping refers mainly to the record-keeping aspects of financial accounting, and involves preparing source documents for all transactions, operations, and other events of a business. 24. Examining of financial information refers to A. Analysis. B. Auditing. C. Recording. D. Balance sheet. Answer. B. Auditing. Explanation. Auditing is defined as the on-site verification activity, such as inspection or examination, of a process or quality system, to ensure compliance to requirements. 25. Who is an external user of financial statements? A. Shareholders. B. CEO. C. Manager. D. Creditor. Answer. D. Creditor. Explanation. Creditor of the business is the external user of financial statements.